Hello and welcome. The US elections are just around the corner, and most polls seem to have Democratic candidate Joe Biden winning by a good margin. In fact, the pollsters at 538 give Joe Biden an 87% chance of winning the White House, and the Democratic Party a 96% chance of maintaining control of the House of Representatives, and a 73% chance of winning the Senate. Now, winning this trifecta would mean that the Democrats have an opportunity to advance a legislative agenda. I'm Jonathan Peeris, one of the producers on CNA's Money Mind, and on this podcast, I ask the experts what investors need to know as they brace themselves for this historic election. I have with me Angela Mancini, a partner at Control Risks, and Dr. Felix Brill, Chief Investment Officer at VP Bank based out of Liechtenstein. Now let's get right into it, guys. The polls favor Joe Biden, but can they really be trusted? After all, in 2016, Hillary Clinton led in the polls and won nearly 3 million more votes than Donald Trump, but she still lost. What should investors take away from the polls this time round, Felix?
That looks quite interesting. I mean, now we are heading into the final phase of that election. The countdown is on. And there's a bit of a difference to 4 years ago, right? I mean, 4 years ago, also Hillary Clinton, the Democratic candidate, was leading by quite a margin. But the margin of Joe Biden is even bigger than the one of Hillary Clinton 4 years ago. So while back then a lot of pollsters were surprised, it was still within the reach of, a typical forecasting error. But now it would be a much bigger surprise if the underdog at the moment giving the polls, Donald Trump, would win.
And it's not just the choice of president either. Angela, it looks like the Democrats could actually take the Senate and keep the House too. In effect, a blue wave sweeping over the US political scene. Now, would that be a good thing or bad thing for investors?
So Goldman Sachs has indicated that if there's a blue wave, which means the Democrats take the White House as well as Congress, they actually would be upgrading their economic forecast for the U.S. And the reason that would be that they would have a higher probability, in their view, of the $2 trillion stimulus package being passed that the Biden administration, or a potential Biden administration, is outlining. And that would have longer-term impacts and longer-term spending going into areas like healthcare, education, infrastructure, a lot on clean, green energy and the like. And so that, coupled with the reduced unpredictability in trade, would all pull together to have a more predictable and beneficial global investment climate. And so they're actually saying they would increase their forecast accordingly. And similarly, Moody's has come out and said they'd expect that a Biden plan versus a Trump plan at this stage would have 7.5, almost million more jobs created, and we would, in the States, get back to full employment by the mid-year 2022, which is 2 years earlier than under a Trump plan.
So the first thing investors need to know: a trifecta win by the Democratic Party is not a bad thing for investments. Of course, it is remarkable to think that at the start of the year, Donald Trump's re-election prospects were actually quite high, with a strong US economy and tax cuts that many businesses looked upon favorably. The main reason that his fortunes turned around so drastically is due to the COVID-19 pandemic. Would you agree, Angela?
It all comes down to COVID. Getting COVID under control is the number one thing that's going to help the U.S. economy shore itself up and then grow. And I think there's a universal recognition of that. And at the same time, what we've seen that's been interesting is that an increased recognition that if you do indeed collect higher taxes and you can put those into productive uses, for example, clean green energy and infrastructure and things that in the States people have said they've wanted for a long time, if you can translate those into jobs, then that has a long-term sustainability impact for the economy. So in the longer term, that actually may be more beneficial for investors as well. So we're seeing an increased recognition of that.
So that's the next thing investors need to note. Getting COVID-19 under control is the biggest task facing the next president. The pandemic has certainly impacted this election, and not just the issues, but even the way the election is being carried out, with huge crowds of people choosing to vote early or choosing to use mail-in votes. And this has led some to think that the losing side may choose to contest the election by claiming that these votes are fraudulent. What's the likelihood of that happening, Felix?
If you look at some of the tweets of Donald Trump, we would have to expect that he would not accept as like if he loses by just a small margin, then he would like call out and say, well, that's fake news or whatever, and this would create a lot of uncertainty. However, on the positive side, given the large margin of Joe Biden in the polls, this scenario doesn't look that likely at the moment. And actually, the probability for that scenario also decreased over the last couple of weeks, because at the same time when Joe Biden was increasing his margin over Donald Trump. However, I must say there is one annoying potential or scenario, that is, it will take forever in the US to kind of look at all the postal votes, right? And so this might create for some days some additional uncertainty, because we might not know who the winner is, even though in the end Joe Biden might win by a strong margin, because it just takes so long to get the final result.
In other words, it's going to be a volatile couple of months no matter who wins. What should investors do to prepare for that?
It's not that easy to time these volatility spikes. So we rather advise our clients to say, well, focus still on your long-term investment goals, on your strategic composition of the portfolio, and make your portfolio as robust as possible for these times. Because at the same time, if you fear, for instance, an increase in volatility by, like if markets drop, you cannot really time that. So if you leave markets too early, it's quite difficult to enter markets again. So kind of, you could also put it that way, the biggest risk is not to be invested, but there are smarter ways to be invested and less smarter ways. So we advise to be really as robust as possible in terms of portfolio composition. For instance, look at risk minimizing approaches, systematic approaches, or add some flavor to the portfolio, like long-term investment trends that are not so risky or dependent on the outcome of the election. So that's one thing you could do. And then the other thing is add something like gold or insurance-linked securities to the portfolio, because it makes a portfolio just so much more robust.
So let's recap. The first two things investors need to know about this US presidential election are: a trifecta win by the Democratic Party is not a bad thing for investments, and getting COVID-19 under control is the biggest task facing the next president. And now number 3. Investors need to prepare for volatility by making their portfolios more robust. Angela, do you agree? And who would provide more stability for markets, Trump or Biden?
Yeah, well, typically the incumbent would say that they would have more stability because you know what you're going to get based on the term they've already had. This is actually not the case in this situation. So with Joe Biden, who's been working in politics for close to 50 years, that's about as far from a wild card as you're going to get. People know exactly what they're getting in terms of demeanor, in terms of where he stands on issues, in terms of transparency of how he'd handle the issues, in terms of who his team would be around him. So that the thinking there would be, while the policies that team might put forth would not necessarily be all that different than a Trump administration. For example, either one of them would be tough on China. That's a very strong bipartisan view now in the United States. But the style and the tone would be so different. Under a Biden administration, he would bring in international alliances and go back to multilateral diplomacy in a more traditional way. So all of those things for markets would be more stabilizing than in a Trump administration. And at the same time, a second Trump administration, remember, would actually be potentially even more volatile than the first one, because the constraints would be off for any concern of re-election.
Felix, let's get back to you now. It's not all bad news coming out of the US right now. The US economy did take a huge hit, and employment numbers are still high. But if they are able to get a stimulus bill back on the table, how do things look?
We've seen a strong rebound after the lockdown measures were removed. So third quarter GDP numbers, they're really strong. And from here, it's going to take some time still. So we have to expect that in the fourth quarter also, related to the new uncertainties from COVID-19, we see a moderation in the recovery. But we still expect that the US economy is going to, economic activity is going to increase, that this recovery is going to continue, and is going to also into 2021. I think being optimistic is very important in these times. And we've seen it over the last couple of months as well. I mean, the recovery can be very strong and creates a lot of opportunities. We see a lot of structural shifts in the economy. Just look at the digitization and the Googles of this planet and so on and so forth. So this creates a lot of opportunities. So there are a lot of reasons to be optimistic. But being optimistic doesn't mean you cannot be cautious at the same time.
So the fourth thing investors need to bear in mind is the US economy is recovering, but needs another stimulus boost to keep it from sputtering out. Another characteristic that seems to make this election different from others is the level of polarization America finds itself in. Some have voiced concern over some of President Trump's rhetoric about not leaving the White House even if he should lose. Angela, how big a concern is this, and could Trump get support from many of the extremist groups who have claimed to support him?
Yes, well, that's something that Control Risks as a risk consultancy has actually been looking at a lot more, and actually having a lot of clients in the business community ask us what we think and how they should plan for that. And the biggest concern from a security perspective is actually the rise of the white supremacist extremist groups, such as were mentioned with some of the debates recently. But there was a recent survey the U.S. Department of Homeland Security put out a few weeks back, first threat assessment they've done, and they said that white supremacist extremist groups are actually the most lethal and persistent threat in the United States. So you may have a situation where you've got some of these groups that are, they're upset and they're armed, and and some of them are trained, these militia groups, and that's now introducing a whole range of uncertainties there as well. And so Control Risks has had a lot of clients come to us and say, how do we, as a business, how do we plan for a contested election? What does that mean for us? And so we've been working a lot with particularly companies with heavy retail footprints to work through threat assessments, to understand where your assets are, what are your crisis management plans, what are the triggers you want to watch for in this case from a physical security perspective, how do you prepare for this? Are your communication plans internally set and ready to go? And so hopefully, of course, we don't even get near there. But again, if there is a contested election, there's going to be a huge uproar in the United States from the voters' communities on both sides, but then also potential spillover and business impacts, not just in the markets, which would be roiled, but also on the ground with the retail businesses.
And so the last thing investors need to know about this election is a contested election could result in protests and maybe even violence, and they need to have risk management plans in place. Is that correct?
As you recall, in the year 2000 with Bush Gore, we had a contested election really just in the state of Florida that worked its way up to the Supreme Court, and at some point Al Gore conceded and said, I'm not going to push this any further. The challenge that we have in this case is that because of COVID, there's such a big expectation of so many more mail-in votes, which has been controversial from the Republican side. So there's more potential for concern there, and there's been conversations around voter suppression happening in different areas as well. But the challenge is going to be if we end up having a contested election state by state or precinct by precinct, what does that mean? And I think both sides have been hiring lawyers, and lawsuits are already happening with the absentee ballots and just preparing for this case. But if we had multiple states that were contested, and there's just a lot of uncertainty. So in sum, what that means for businesses, a lot of uncertainty on ultimately how it would come down and what would happen along the way. I think both sides, if they feel like they are getting that they're losing a contested election that they fundamentally believe they would have won, we're going to see demonstrations and protests out on the street.
Of course, we all hope that doesn't happen, but that does bring us to the end of this podcast about the 5 things investors need to know about the US presidential elections. Just to recap, number 1, a trifecta win by the Democratic Party is not a bad thing for investments. Number 2, getting COVID-19 under control is the biggest task facing the next president. Number 3, investors need to prepare for volatility in the next few months by making their portfolios more robust. Number 4, the US economy is recovering, but needs another stimulus boost to keep it from sputtering out. And number 5, a contested election could result in protests and maybe even violence, and investors need to have risk management plans in place. I've been speaking with Angela Mancini, a partner at Control Risks, and Dr. Felix Brill, Chief Investment Officer at VP Bank based out of Liechtenstein. Thanks a lot, guys, for joining us. And thank you for listening to the 5 Things You Need to Know podcast by CNA's Money Mind team. Tell your friends about us on social media and catch us again next time. Goodbye for now.